Ready or not, here they come. Only 4 months until we find out who the next presidential nominees are, and a mere 8 months before we elect one of them to lead the world's largest economy. Joining us today in studio is Frank Holmes of U.S. Global Investors, who will help answer the real question, which is who will best benefit your portfolio. Frank, good to have you here.
It's great to be here.
So Frank, let's talk about this. There's an actual theory with regards to a presidential election year and how markets will perform. What's your take? Who would best benefit the economy here?
Whoever has the best fiscal policies, one streamlining all the rules and regulations and creating some economic benefits for small businesses. That person that can truly advocate that will be the best. And right now it appears to be Trump.
Wow, well, it's definitely an atypical election year, so we can see a
Definitely
lot of...
not Bernie.
Definitely not Bernie, okay. But so do you also think he would best benefit gold, and why?
Well, I think that Bernie would be probably the best for gold because socialist countries always self-destruct faster, their currencies, and gold always rallies faster than that country's currency. So if you're thinking that thought process, then I would say that if you're just a gold bug and you want to bet on destruction, then Bernie Sanders is the best guy.
All right, so Trump best for your overall portfolio, but Sanders for gold, correct?
Correct.
All right, well, talking about gold now, let's switch gears here and take a look at the yellow metal and how it's doing ahead of the FOMC. It's struggling here a little bit, Frank. What do you make of its price action here?
Well, a lot has to do with real interest rates and what's happening with the 10-year government bond. The 10-year government bond was 1.6265, and now it's risen to just under 2%. And you've seen that as it broke out above the 50-day moving average, the 10-year yield, that all of a sudden gold's rise start to slow down. And it's actually down for the past 50 basis points for the past couple of weeks.
Do you think we'll expect a rate hike announcement anytime soon?
No, I'm going to bet with Morgan Stanley we're not going to see a rate hike. And this is a big week with all the central bankers around the world are talk.
Right.
And there's lots of drama around the world. But what we really need to get a global economy ignited is strong fiscal policies of deregulation and dropping taxes.
Frank, does the Fed still have cred?
It still has cred because it controls the wallet.
All right, Frank. Well, also just one more thought on gold. What do you do with it at these levels? Is it a buy or sell signal here for you?
Well, we were talking earlier, and I think it's going through that process of consolidation. Mathematically, anytime gold has had such a percentage move over several months, it's due for a correction, and it's a modest correction. It could be 5%. It would be a non-event before it rockets higher.
All right, Frank's touchdown pass. What's it going to be this week?
Yellen. She's yelling a lot, and everything will be focused on the FOMC meeting. So I think that's the touchdown pass to focus on.
Frank, thanks so much for joining us in studio.
Great to be here.
And thanks for watching this edition of Kitco News' Gold Report. We'll see you tomorrow.